for the purpose of people. Okay, so basically now I like starting from a higher time frame, specifically the daily time frame. You understand? Specifically the daily time frame. Then there is something I like to look at first. Let me break this. All right. So yeah. So now, first thing you have to look at, let me assume that the market is actually going up like this. Sorry, not this, sorry. Not this. Okay, let me assume that the market is basically going up, come down, go up, come down, and go up. So I will be interested on the trend line. First thing, you need to know the directional bias of the whole trade. We have impulsive move of a market and the correction move of a market. Most of the times, it's better off for you to join the impulsive move. So I will show you what I mean by that in no distance time. So basically, if you look at this trade now, you will be able to discover that this trade is in an uptrend. You discover that this trade is an uptrend. So basically, I will be interested on taking this trade on the second touch of this trend line, which is basically here. All right. I'll be interested on going long here. I'll be interested in going long here. All right. My stop loss right above here. After this, I'm going to go straight to the chart and show you what I mean. So this is what I'll be looking out for if this happens to be a trade. You understand? But because it made a third touch is not a reason for you to take the trade. There are a whole lot of confluence you are going to check again. You will check your candlestick formations and you will check what we call pattern, chart pattern. Whether is it giving you a descending chart pattern, triangular chart pattern. I will show all these things to you before the end of this lecture. So basically, let me quickly go to the charts, giving you guys this kind of insights. Let me go to the charts and show you what I mean. Please, I hope you all can hear me so that I won't be talking to myself. If you can hear me, do let me know on the charts, on the chat box. Okay, all right. Great. Okay, let me admit more people. Okay, I'm trying to admit more people. More people are joining. Let me admit more people. All right, done. So I said I'll be using NZDJPY as a point of reference. This is one of the trades that I took, or rather one of the trades that I'm still waiting for you to mature before I take it. So if you look at this trend now, this is on a 4-hour time frame. Basically, we discovered that this trade is in what? Is in an uptrend. Let me show you what I mean by impulse, correction, impulse. This is an impulsive move of the market. This is an impulsive move of the market. This is the correction move of the market. After the correction, then the market is going to do what? Make an impulsive move again. This is impulsive move in the overall direction of the trend. Let me go to Euro USD, which is also one of the trades that we took this week, and show you that again. That is the trade here, Euro USD. So I guess this, you guys can remember this trade. I did send it out this week on the Telegram community, the sell move here. All right, I did send it out on the Telegram community. So basically, if you look at this trade now, you'll discover that the market is in what? Is in a downward trend. So this happens to be what? All these things is impulsive move of the market. After the impulsive move, what happens? This is a correction phase. And after the correction phase, we are also anticipating that the market is going to do what? Is going to sell down. And that is why we like going on the higher time frame to understand the overall move of the market. Remember rule number one, you go in the direction of the trend. We do not want to go against the direction of the trend. So now that you've been able to discover the direction of the trend, what you will do is basically zoom your computer or rather your chart to the nearest point that you can see clearly and try and discover the chart pattern that is going on there. So when I zoomed clearly into this zone that is going on here, all right, I was able to discover this trend line. Let me delete all this. Let me delete all this. Yeah. So when I zoomed clearly, I was able to discover this trend line. All right. Boom. Second touch and third touch. Now, someone asked a question, how you know fake breakout. I'm going to answer that in this video. All right. So basically, what's going on? Okay. That's it here. And here becomes your what? First touch, second touch, and then what? Third touch. I was interested on taking this trade on the fourth touch, which happens to be here. But as you can see, the market actually gave a fake out here. All these things is what I consider as fake out. All right. Most people who trade trend breakout, trend line breakouts, we actually say, okay, that since this trend line has been doing what's broken, that they should take a buy. But as you can see, I was able to take a sell here, which let us match our take profit. And when I sent this out on the Telegram community, I saw a comment from someone. He said that he was actually expecting a buy. All right. That was people who was actually taking this to be a breakout, but it was a fake breakout. Now, how do you know fake breakout? A breakout becomes valid when there is a break in structure. Yeah, I come again. A breakout is valid when there is a break in structure. Now, a structure is broken when the last high that was created by the market actually gets broken, or when the last low that was created by the market actually gets broken. Now, coming to this Euro USD, we actually say that there is a break of structure when this occurs. Had it been, as you can see, this red zone we are seeing here is let me delete it and redraw it. All right, this zone here happens to be the last high that the market created before falling. All right, so the market actually made this high here. All right, after coming down here, it made this high and then crashed down. So for you to say that there is a break of structure, then this zone has to break. This zone here has to break, right? But looking at this chart particularly, you can discover that what happened, the market actually came here now, couldn't break this zone and couldn't break this zone. Had it been that the market came here and gave me something like this and then retested, I would have been taking what a buy to rally it up here. But the market never did that. It came here and then what? And gave me a candlestick confirmation for a sell. This is a what we call a bearish engulfing pattern. Let me zoom in clearly. Let me zoom in clearly so that you all will see it. Yeah, it gave me a pure reversal candlestick. So if you do not know your candlestick pattern, you need to know it very well. So it not just give me a pure reversal candlestick, but remember the confluence I told you, it gave me an ascending triangular pattern, it gave me candlestick formation, and it gave me double bottom. Let me go down to the lower time frame so that it will be more clearer. If I go down to the lower time frame, which is 1H, all right, which is 1H, because this trade that I took, I actually joined the second entry. The market always give you an opportunity to join. I missed the right entry, so this one was actually to join the trade. So as you can see, this trend line you are seeing here is what I call ascending triangular pattern. Let me draw it. Yeah, this trend line you are seeing here, this line you're seeing here is what I call ascending triangular pattern. And if you look at it clearly, the market did what? The market broke this line. After giving this ascending triangular pattern, what did it do? It broke it and gave us what we call double top. All right, this is the first, this is the second. Is some people call it M's and W, either double top or what, M's and W. If you go to 4-hour time frame, this is an engulfing candle. All right, all these actually formed as one candle, which happens to be an engulfing candle. So this is a pure reversal candlestick pattern. And remember, it is in our zone. So you need to know what you are looking for, guys. It's not like you're on a higher time frame, you are looking for what, a sell, and in a lower time frame, you go onto a lower time frame and they are seeing a buy and take a buy. No, you need to know what you are looking for. So coming to this trade now, what are you going to do? Boom, this will right here be your entry. All right, stop loss right above here and take profits right below here. Now, somebody was asking me, how do you know where to place your stop loss? Why do you know where to place your take profits? I will answer that here. All right, so this first one would have been my first entry, but I missed it. So when the market came here, this was the one I saw. The one I saw that I sent out on the community was this trade. This one now. This one now was the one that all of you took. If you go back to the last chart, you're obviously going to see it. All right. So what I saw was very simple. After the market gave this reversal, what did it do? It gave us a correction. Remember what I tell you, impulse correction. After this great impulse, what did the market do? It gave us this correction. All right. So on the break of this correction and on the retest, I took this trade here. Immediately this correction occurred. So I would have also been a perfect place to take the trade, first entry, but I missed it and then I went for this second entry. All right, I hope it's making sense to you all. I hope it's making sense. So after this happened now, I was able to picture this trend line that you can see here, which happens to be what? First touch. Here happens to be what? Second touch. All right, here happens to be second touch, and you extend it. Remember, you place it on the wick. Do not make the mistake of placing your trend line on the body because it's going to give you a fake out. You will think it's actually going to break out. If you go to a lower time frame, it will appear as a fake out while it is just a wick. All right, so this was another trade that I missed. I would have taken this trade today, but I missed it. I think either today or yesterday, but I missed it. The market came here again and gave us what? A break of structure. This is a correction move, right? This is what I call correction. You understand? This is the what? Impulse, and it gave you what? A correction, and therefore an impulse. You understand? So that was a trade that I missed that would have also made us a big money. So had it been, I saw this clearly like this, I wasn't looking at these charts. So this is what I would have done. I would have actually placed my buy here. All right, sorry, sell here, stop loss right above here, and then take profit below here. As simple as that. So, and me taking that trade, I have trade confluence on that particular trade, which is what? First touch of the trend line, second touch of the trend line, third touch of the trend line, and what? an ascending triangular pattern or a correction, which is perfect. Understand? So this one now is the trade that I took today. Yeah, I took it. It's actually a scalping because I was basically going against the trend. I was going against the trend, right? That is basically this trade. Now, I did not send it out on the Telegram community. The reason is that I do not want all of you to take my trade as a signal. I want you to learn how to trade by yourself. So what I saw that made me take this trade, all right, I will show you real quick. Let me go to the 4-hour time frame. I like 4-hour time frame because it gives me a clearer view of the market. You understand? So if I go down to my 4-hour time frame, okay, this trend line has gone out. Initially, it was like this. It was like this. All right. Yeah. So why I took this trade is that I knew that this market is in a downtrend. It's actually in a downtrend. So coming to this zone here, which happens to be what my first touch here, second touch here, third touch here, and then fourth touch here. I knew that the market was actually going to respect this first touch. However, since the market is in a downtrend and needs correction phase, I'm not expecting the market to come up here. No, 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 no. The least the market can come up is here. All right. Then from here, the market might now start doing what? Might now start pushing down. So that was why I actually scalped this. It was a kind of scalp. Immediately the market did what? Came up here, although it gave me my confirmation on the lower time frame. Understand? It gave me and also gave me a break of structure on the lower time frame. So I took the trade here and did what? And I was able to capture this trade you are seeing here. I took this trade today, as you can see. All right. So that is basically for this trade. Now, somebody asked me, how do you know where to place your take profit and where to place your stop loss? Now, where to place your take profit or your stop loss basically depends on your strategy. Every strategy have what we call entry criteria, exit criteria, stop loss criteria, and take profit criteria. I'll explain that in few minutes time. So stop loss criteria is that basically where you should place your stop loss. If you go across all my charts, you notice that my stop loss is usually above or below a red zone. If you go to the Telegram community, I don't know if I can share this screen so that I will show you what I mean by that. Let me try and split this, open the Telegram community so that I will share it. I'm coming. Let me open it. So if you have any question, kindly drop it on the comments on the Telegram community. I'll be answering some of the questions in a few minutes time. All right, so let me split the camera. I'll go to Zoom, share screen. Let me share the screen for the Telegram so that I'll show you guys what I mean by stop loss criteria, take profit criteria, and exit criteria. me share my screen. Okay, I hope you guys can see the Telegram now. I don't know who is making that sound, but please. I don't know who is making this sound, but if it's you, kindly off it. Thank you. I hope you guys can see the Telegram community now. If you can see it, kindly let me know. Let me know on the chat box if you can see it, let me know, let me know, let me know. Not Discord, Telegram. Can you see a new Telegram? Okay, yeah. So basically, let me go back to some of the chat that I posted. I want to answer some of the questions that you people asked, which is how do you know where to place your take profit and where do you know how to place your stop loss? So this is one of the trades that I sent out this week. This is GBP USD that later smashed our take profits. You understand? So basically, how do you know your take profits and your stop loss? So looking at this trade on what I did just teach you guys now, my first touch is somewhere here, up. It didn't show clearly. So this was my second, this was my third touch. This was my third touch, and this happened to be what? My fourth touch. And coming to my fourth touch, what did it give me? It gave me a correction or ascending triangular pattern. That's why I took this trade from here, guys, and rally it down. And it smashed our take profits. It actually smashed our take profit. So your stop loss will be at just slightly above the last high that was created. And here is the last high. The last high that was created is what? The last high that was created, as you can see, is this zone here. All right, it's basically this zone. So just a little slightly above that, depending on your entry. So that's it for this one. Let me check another trade that we did send out. All right, this is the Euro USD that I just explained. Okay, so there's another trade that I did send out. I think, yeah, AUD USD. All right, as you can see it clearly, this one is also in its correction phase. As this can see, this happens to be what? First touch, second touch, third touch, and then fourth touch. So if you can see, my stop loss is strictly just above this zone that you can see here. All right, slightly above this zone that you'll see here. That's why my stop loss is here. And then my take profit happens to be on the last high that was created when the market was going up. All right, let me clear this. So that's why you are seeing my what? You are seeing my take profit here. My take profit actually would have gotten down to this red zone to align with this place here. But I like placing it slightly above the zone because market might just get here and start reversing. Understand? So that's why I like placing it there. Then take profit slightly above here. So it all depends on your strategy, is what is going to determine where your stop loss is going to be and where your what your take profit is going to be. And sometimes even at that, your trade might also hit your stop loss. So do not think that every time you are going to having a win-win. No, sometimes you take a loss in the market. Like yesterday I took a loss on GBP USD, and I think I should go for educational purpose and show you that. But immediately the market smashed my stop loss, it went in my favor. Right, it went in my favor. So let me go to GBP USD. That's it here. GBP USD. Right, that's the trade here. Right, so basically the loss that I took, I don't know, it's like the chart has actually left. I was trying to short here. This is what I was trying to short, and my take profit was just here. Let me zoom in clearly. This GBP USD. All right, so I was trying to go short. This is what I actually had. Understand? But this candle you're seeing here actually short me out. All right, let me zoom clearly. I think there was some fundamentals or something. This is what I had. I took the trade, but I took a loss on this trade. Just this candle, this red candle, I hope you guys can see it. Just this red candle is what did what? Is what smashed my take profit and immediately went and smashed my take profit. It's currently running towards my take profit already. So I would have closed the trade because this Friday. All right, so that's one of the things you need to use proper risk management. What is going to make you profitable in this forex is using proper.
Hello. We couldn't see the chart, brother.
Can you see the charts?
No.
You can't.
We could see the telegram.
Can you see the charts? Wait.
No.
Okay, you can't see the
telegram is visible.
All right.
Telegram is visible.
All right, sorry, I will switch to the charts. I think there is a mistake. All right, I'll switch to the chart. Sorry for that. Sorry. Okay, can you see the chart now?
Yes.
You can see the chart now. All right. So basically, I was actually trying to say about the trade that I took today, I guess, that smashed my stop loss. It was actually yesterday, GBP USD. All right. As you can see clearly on this trade, the trade smashed my stop loss, and went in my direction. So what actually caused it was this wick here. Are you seeing this wick here? This red wick. All right, this is the red wick that smashed my stop loss, and immediately the market dropped in my favor and is currently running in my direction, closer to my take profit already. I would have closed the trade because today is Friday. As a day trader, I open my trade every day and close it that same day. So that's why you need to use proper risk management. No matter how solid your trade is, your strategy is, you're obviously going to be experiencing some losses. So why did I take this trade? I hit my stop loss doesn't mean that I was wrong in my analysis. I was right, but the trade just happened to hit my stop loss. It happens sometimes, all right? So why did I take this trade? Why did I take this trade? Just the same thing that I do tell you guys about impulse correction, break of structure, and then retest of the trend line, all right? So if you look at GBP USD, you would have noticed, let me zoom out clearly. If you look at my charts clearly so that you all will understand what I mean. And there is also another confluence that I use, which is psychological level. I might not go into it today. As you can see on the right part of my screen, you'll be seeing some psychological random whole number, 1.4 thousand, 1.3800, 1.36500, 1.3600, 1.364,500. All these things are psychological levels, and it's very, very powerful. If I'm going to make a video or a seminar on psychological level, it's going to be strictly on that because it is something that is broad. It took me a whole lot of time before I understand it. All right. So basically, if you look at the GBP USD, you will discover that we have first touch after this distribution phase that occurred here. After this distribution phase, this is a distribution phase, and distribution phase is a sign of reversal. So I will be making a video on that. I think I made a video on distribution and the accumulation phase on my YouTube channel. So I will be posting the link so that you can go and watch it to understand that distribution phase. So distribution phase is actually a sign of reversal. So after this distribution phase, what happened? The market has been falling. I understand the market has been falling. So from there, I was able to pick a trend line, which if you look at it clearly, you will see what you will see here happens to be my first touch, second touch, and third touch. You remember, as the market is going, you keep on adjusting it, all right? You keep on adjusting it to suit the direction. Like initially, my trend line was like this. It was actually going like this. This was how my trend line went. I hope it's clear, all right? So here happens to be the first touch, second touch, and I was able to take this trade, all right? From here, I took this trade. I hope you can see it. I took this trade and rally it what? And rally it down. All right. So after this has happened, then this trend line is no longer what? Useful. Then you put up another trend line to follow the current price. All right. So I was able to place another trend line here. All right, which went like this. Then here happens to be what? Here happens to be what? First touch. All right. Second touch, and then third touch here. Remember this, I've taught you guys what I mean by fake breakouts. I've taught you guys already. Here, this thing that occurred here happens to be what? A fake out. But I was able to capture a trade. As you can see from here, I was able to capture this trade here. I was able to capture this trade here. Let me zoom in so that you see it. I was able to capture this trade that you're seeing here. I was able to capture this trade here. All right. So, but this is not actually my main focus now. I'm trying to show you guys how I took this trade. So, looking at it now, after this one too occurred, I extended this trend line. You understand? So, after extending the trend line, I noticed that what? Here becomes my first touch. Here becomes my first touch. Here becomes my second touch. And here becomes my third touch. But look at what happened. We had a fake out here. We had a fake out. This is actually a fake breakout. All right. Yeah, the trend line actually got broken, as you can see clearly here. This is the trend line. It got broken, pure. It got broken, but is a fake breakout. And that is why if your strategy is based on fake, is based on breakout, if you are using a breakout strategy, then you need to be very, very careful, because most of the times you are going to experience a whole lot of fake out. All right. So when I zoom in here, remember, I've already noticed that I've already drawn my zone, and this is my zone. This is my zone that you can see here. All right, you already drawn my zone, which is also in my psychological level 1.3800, which makes this zone very, very strong. I'm making a video on psychological level. Is very, very important in your trading journey if you are a price action trader. So now, coming to it, you also discover that this happens to be what? Impulse and then correction. Therefore, we're expecting the trade to do what? To drop. As simple as that. So you zoom in and look for entry. So when I zoomed in, let me go to 1 hour time frame, 1H. Let me go to 1H. Yeah. So coming over to 1H time frame, all right, I was basically waiting for a break of structure. I knew that the market will drop, but I wouldn't just start selling, because it's already on the touch of the trend line. I will look for what? I will look for a strong entry. So this happens to be where I would have taken the trade, but I missed it. I would have taken the trade from here after this break here, and it gave me what? M and W, or what some people might call double top, which is this one and here two. Right? That is where I would have taken this trade. I would have taken it from there, which is here. All right, then my stop loss just above that my zone, and then my take profit would have obviously been here. Sorry, this is what I would have expected on this market, but I missed it. Sometimes you miss trade. Do not chase it. Once you have missed your trade, do not chase it. You understand? So when I came back, the market was already here. Understand? I did take that sell. Sorry, I didn't take that buy. I knew some people would have actually be saying, okay, this is a first touch somewhere down there, this second touch, third touch, and then fourth touch. Then so that you take what? So that you maybe take a buy or something. But that's why I say that you need to know your what? Chart pattern. chart pattern has already shown me that this market is not going to hold as a buy, and therefore buying is going in the direction of, is going against the trend, because the trend is what? In a sell. So I basically waited after getting this break here, all right, after getting this break here, then this retest. Remember, this was the last zone that was that the market actually, let me use the better this thing, not this, okay, this was the last zone, or rather the last low the market created before breaking. So someone's mic is off. Can you kindly off it, please? Thank you. All right. So this zone happens to be the last low that was created before the market started going up. So I basically waited for a break of this zone and then a retest. Let me clear all this so as to be clear. And when it came here, what did it do? It gave me this ascending triangular pattern. It gave me this ascending triangular pattern. That's why I took this. However, the market later hit me out on stop loss by just this small week that you are seeing here. So next week, what I'm expecting on GBP USD is still sell. I'm expecting a great sell on GBP USD. So which is basically, if the market can actually retest this trend line here, all right, then I will start looking forward a sell. I'll take my entry here. So basically, this will be bringing me to the end of this seminar. If you have a question, kindly ask questions so that we call it a day. This is just a kind of trying to give you guys an insight of what happened this week. Maybe from next week, we will be picking a particular topic and be discussing. Maybe this week, we teach you guys how to use psychological level. Next week, we teach you guys how to risk management, which is basically how you can calculate your pips and know the amount of dollar you will use, know the amount, the particular lot size you will use, so that if you hit your stop loss, you will actually get a particular loss. Let me assume that you want to use $30 and you want to use $30 and your stop loss is what? Your stop loss is 30 pips. What amount of lot size will you use so that if you hit your stop loss, it's going to be what? $30. So that's one of the things that we will be teaching you guys. All right, so if you have a question, kindly ask now. But before then, let me take some questions that some people dropped. I saw some questions that some people dropped on the. Please, your mic stopping us. I don't know the person is mic. Turn it off. Kindly turn your mic. Kindly turn your mic. Someone's mic is off. Please kindly turn it off. Thank you. Okay, I will. That is Netflix. Kindly turn off your mic. All right. I've muted you from here. So basically, yeah, I've muted him already. So someone asked a question, which is price confirmation to enter a trade. I think it's Kappa from the Telegram community. Is a price confirmation to enter a trade. So like I said, price confirmation depends on your strategy. Most of the times I use candlestick confirmation. I use chart pattern confirmation. So chart pattern has to either do with double top, M's and W, or double bottom, which some people also call W, or you can use inverse head and shoulder. So I will be teaching you guys chart patterns maybe in the next seminar, all right, or the next 2 seminars that will be coming. So, or ascending triangular pattern. Like if you look at this one now, what I actually used here, this entry here is what we call what? Ascending pattern. This is ascending pattern. So that's what I used to get the entry of this trade. is an ascending pattern. You can use candlestick confirmation, which is also bullish or bearish, but all these things are powerful depending on where it occurs. You won't just see it randomly in a chart and take the trade. No, it has to be in your zone. So his next question was habits that can help to always go by one set trading rules. The habit is very simple. It's very, very simple. Select a few trades that you focus on a Saturday like this weekend, maybe on a Sunday, you select few trades that you are obviously going to take on, maybe 2 or 3 trades. As a beginner, you should be focusing on 2, 3, maximum 5 trades. That is what you focus on the week. All right. So the next question was, what's the max number of trading setups and ones used to avoid confusion? I think I've answered that already. So there's another important question someone asked here. He was asking, what is the possibility of growing a $50 to $1,000 account? I'll tell you this, it's strictly impossible. And I'll tell you what I mean that it's impossible to grow a $50 account to $1,000 account. It's not actually impossible because you can do it in 2 ways. It's either you use proper risk management or you do it by flipping. If you want to do it by proper risk management, it's going to take you more than even a year to grow a $50,000 account to $1,000 because we are risking basically 2% of your account on $50 account. I think 10% is $5, so 5% should be $2.5. So if you are risking $2.5 on a $50 account, imagine how many trades you take before you make $1,000. And remember, you also be taking loss. So basically, if you want to grow it with proper risk management, it might be a little bit impossible. It's okay if I use the word impossible, all right? But if you want to do it by flipping, you can even grow a $50 account to $1,000 account within 1 week. Yeah, it's possible. So in flipping, you can even risk 50% or even 60% of your trade. On a $50 account, if you risk $30, you can risk $30 and close $100. Then if you already have $100, you can risk 80 and within 1 week you have done growing it. But it's not usually advised because you can't afford to lose the money unless you can afford to lose the money. All these people are seeing it doing flipping on YouTube. They can afford to lose the money, and if they lose it, it's nothing to them. But you, that's what you can afford is $50. Then there is no need of you trying to flip it. The only thing you can do is try and grow the $50 account to, let's say, $100. Withdraw it and go for Pro Firm account. All right. So Pro Firm is actually giving a whole lot of traders an edge in the market. With my Forex fund now, you can get a 10,000 challenge account for just $84. So if you have $50, grow it to $84, withdraw it and go for what? A Pro Firm. I'll be posting this of some Pro Firms that I advise people to go on the Telegram communities because there are a whole lot of scam Pro Firms out there, so that you will go and fall for the scam ones. So if you have a $50, my advice for you is grow it to $80 or $100, withdraw it and go for what? A Pro Firm challenge. If you have a $10,000 account, any money you make, they give you a profit split. Some people share 90-10. They give you 90% to take 10. So if you make $1,000, they give you 900 and take $100. All right. So that's it for that. So he asked, what is the best lot size on this plan? Lot size that you should use depends on what you want to risk. If you want to risk $30 per trade, $20 per trade, then you did the math and use the appropriate lot size. The recommended pips to catch per day, it depends on the kind of trader you are. If you are a scalper, then you'll be looking at capturing a few pips. If you're a day trader, then you should be looking at going maybe 1 to 2 or 1 to 3. So it basically depends on where your stop loss is. Like if you look at this trade, I had look at the screen. I had 24 pips stop loss here, and my take profit is 107, and the risk to reward is 1:4. All right, so that's basically it. So you're here to recommended pips. It just depends on what the market is giving you. So how many minimum trades per trade can one take on this plan? For me specifically, I take maximum of 2 trades. If I take the first one, if I see 2 entries per day, I will take it. If I see 10 entries per day, I will take only 2 and leave the rest. This is where most beginners get it wrong. You are seeing 10 different entries and you want to take 10 of them once. No, you're obviously going to blow your account. Right? If you see 10 different entries that is giving you a strategy, look for the best two and do what and take them. All right. So he said, how long do you think we take a person to achieve this? I've answered that already. So the next person said how to find real and fake breakout. I've answered that. How to take conversion. I've answered that. It's better if you do okay. What are your trading rules and strategy? How do you do a back testing? And how often do you back test? Back testing should be done every day. Sorry, every week if possible, as often as you can, right? As often as you can. Back testing will make you know if your strategy will work or not, right? So for you to do back testing, you actually need to get a trading view account and upgrade, so they give you the opportunity to be able to backtest. If you are using MT4, you can't actually backtest. So our next person asked question, what are the time frames swing traders should use to analyze the market? Both swing trader and day trader should basically use the higher time frame. Maybe a swing trader is actually looking to capture a higher peak move, maybe 200 pips, 300 pips. So you should be looking from weekly to daily, and then the minimum is 4 hour. You take your entry on 4 hour. But if you are a day trader like me, then you should be looking at maybe just from daily 4 hour, 1 hour, then you entry on 15 minutes maximum. Sometimes you entry on what? On 1 hour. So which strategy do you use? How to be a profitable trader? To be a profitable trader is if you learn how to trade. It's actually funny. Follow your strategy, and if you are making money, then you're a profitable trader. If you're not, then you are obviously a struggling trader. So that's all for the questions. All right. So if you have any question you would like to ask, I will unmute people here. Kindly raise your hand. Just raise your hand. I will unmute you so that you ask your questions. All right. If you have a question, raise your hand. If there is none that has a question, then we are going to bring this seminar to an end. All right, so if you have any question, kindly ask before I go. Okay, it's like nobody has question for now. So I will be bringing this seminar to an end. Happy to see you all. Muhammad Bashia, sorry if I'm getting the pronunciation wrong, and CKH Hethang, right?
Can you explain QM pattern?
I can't, okay, it's like I'm hearing you, Mohand. I didn't get your question.
Can you explain QM pattern? Question model.
I can't get that clearly. Your voice is not that clear. Can you come again? Or get close to your mic.
Quasimodo pattern. Can you explain Quasimodo pattern?
Okay, pattern. Yeah, I would be like I actually said I will be explaining chart patterns or patterns on the next seminar. All right, it will actually be a different course on its own. I will handle chart patterns strictly. So maybe on the seminar that I'll be handling chart pattern, then you bring up the question. All right. I hope it's clear. Okay, so if another person have question, kindly raise it up. Netfrex, Pasindu, Shanuka, Sanda. Sorry if I'm getting the pronunciation wrong. Now I can see you, Sandra. I can see you, Juan, and many other people. Right. So if there is no other question, this happens to be the end of the seminar. Happy to see you all. I'm seeing someone asking me, what time frame do you take your trade? I think I've answered that already. The time frame depends on the kind of trader you are. If you are a swing trader, you actually want to take your trade starting from the weekly time frame, daily time frame, and minimum should be 4 hour time frame. Then if you are a day trader like me, you should be looking at starting from daily time frame, 4-hour time frame, 1 hour time frame. 1 hour and 15 minutes should be your entry. Then if you're a position trader are people that can leave their trade for months. Then you should be looking at the yearly and the monthly, all right, if you're a position trader. So that's it for that. All right, so this will bring us to the end of this seminar. Happy to see you all and happy weekend. Do well to do your analysis and select the trades you're obviously going to take for the week. So bye for now.